Hi everyone, this is Suprana. Welcome to my channel. Today I wanted to talk to you guys about a couple of books. Don't worry, I will not get into a lengthy book review and bore you guys. I realize that not everybody is interested in that and not everyone has the bandwidth to read books as well. But what I wanted to share is quite important, and it's a couple of lessons that I have learned from these books. And it's about a very important topic. It's about money. Right? Money is a very important aspect in our life, and it affects all of us, and it can become a very stressful, fearful force in our life as well, right? I mean, we are constantly worried that whether we are earning enough money, whether we are saving enough money, if the money is growing at the right rate, what's the interest rate, etc., right? So over the last few years, what I've realized is that managing money doesn't really require a lot of intelligence or a lot of research, and most of us don't even lack information about how to save money, but what we need are better principles, better frameworks. So that's what I'm going to talk about today. So I have a couple of books that I feel everybody can read and get inspiration from. So the first book that I wanted to talk about is this. It is called The Little Book of Common Sense Investing, and it is written by John Bogle, who was the founder of Vanguard Group, one of the biggest fund managing companies in the world. So what does this book talk about? It essentially says that stock market as a whole is a wealth generating machine, okay, but an average investor like you and me, we are never able to get the best benefit out of it. Why? Because we are constantly trying to time the market, outwit the market, or predict the market, and let's face it, most of us are not successful or not getting the best return out of it possible, right? So what does he say? His philosophy is very simple. Don't try to beat the market, just own the market. And how? He wants us to invest in very low cost index funds. Now, for the uninitiated, what is an index fund? An index fund is nothing but if I were to replicate the a particular market index, something like say Nifty 50, I'll create a fund with all of the stocks that are present in a Nifty 50 index, and it will replicate Nifty 50. So when Nifty 50 grows, my investment will also grow, and vice versa. So for the last few years, if you have seen, or even last few decades for that matter, Nifty 50 has grown at a very steady rate, okay, or say an average of 15%. And if you had invested your money in an index fund, you would have gotten a diversified portfolio, and yet you would have received this much outcome as well, okay. So there is one more important lesson that he talks about, one more benefit that you will get if you start investing in index funds regularly, which is index funds are very, very low cost. Most of us often end up investing in mutual funds and all, and we don't even see what is the kind of fund managing expenses that we are paying. How many of us goes and checks the expense ratio, right? It eats into our returns, okay? That doesn't happen with an index fund. It is very low cost. Same with an ETF. So this book has actually taught me to look into the expense ratios, how much money we could have earned, but we are paying in terms of fees or expenses, right? So that's also a very important lesson that we have learned from this book. This book is really, really good if you're not someone who knows a lot about investment, who can do a fundamental analysis of a stock, or even if you don't have the bandwidth for it, right? So this will actually free you from all the pressure of figuring out which stock will rise next and which stock will fall, and it will still give you a very diversified, very good portfolio. So now let's come to the second book. The second book is this, The Little Book That Still Beats the Market. It is written by Joel Greenwald, and this book is for someone who wants to go a step further, okay, who wants to actively invest in stocks. Now this book actually will give you a formula which will work over a huge portfolio of stocks, and which will tell you which stocks to select and which to reject, okay. The formula, which is called the magic formula, actually depends on two things. One is return on capital, and the other thing is earnings yield. So the higher the return on capital and the higher the earnings yield, it means that you're actually selecting a business which is generating, great amount of profit, but is right now cheap. Okay, so you're actually paying a lot lesser than what the business is really valued at. So what this does is, this formula will actually create a sort of a weighted average. So if you put in say 50 stocks through this formula, it will give you a weighted average, and it will tell you which one is the best in terms of both ROC as well as the earnings yield. Now there is a disclaimer. This will not work for people who want to get short-term returns. This is for a typical value investment, somebody who believes in a value investment principle, okay, wants to hold a stock for a longer time and see the results. This is all about value investing. You will not, and even in fact, once you have started investing in this, you will see that it might even show you a decline for a couple of years initially, but over the long run, this formula has always worked. And this was initially, this formula was initially talked about by Benjamin Graham, and the similar kind of investment principles have also followed by people like Warren Buffett and Charlie Munger and all of the other value investors. So the idea is to stick to it patiently and keep investing very regularly. So in my next video, I'll try to come up with a few more books and principles in that for my more advanced friends who want to actively invest in stock market and create a very healthy portfolio, long-term portfolio. And meanwhile, if you really enjoyed this breakdown, please subscribe to the channel, and in the comments, please comment below if you feel there are any principles that you want to talk about. If something has changed your life from a money perspective, I would be very happy and interested to know the same. Thank you so much.